Hey, what's up, crypto enthusiasts? Today, we're diving deep into the exciting world of Bitcoin to uncover the key catalysts behind those thrilling price surges. I'm breaking down the 5 things that cause Bitcoin rallies, those moments when the market seems to explode with upward momentum. So if you're just getting into crypto and trying to understand these market dynamics, stick around. This video will give you a huge head start. We'll equip you with the knowledge to recognize potential rally triggers and make more informed decisions. Let's jump right in, shall we? First up, news and adoption. Whenever Bitcoin hits the headlines, like when a major company announces they're accepting Bitcoin as a form of payment, signaling a growing acceptance in the mainstream economy, or a country boldly adopts it as legal tender, validating its potential as a global currency, people get excited and the market takes notice. More excitement means more buyers entering the market, and that increased buying pressure inevitably pushes prices up, creating a rally. This is basic supply and demand at play. Next, let's talk about scarcity. Bitcoin has a built-in fundamental limit. Only 21 million will ever exist, making it a truly scarce digital asset. This scarcity is a key part of its value proposition. To further control the supply, every 4 years, the amount of new Bitcoins released into the network gets cut in half. This is called a halving event. It's a pre-programmed mechanism designed to gradually reduce the rate at which new Bitcoins are created. When that happens, the available supply of new Bitcoins drops significantly, while demand often stays high or even increases, and historical data overwhelmingly shows that the price of Bitcoin usually goes up following a halving event, as the reduced supply puts upward pressure on the market. Now, let's discuss a powerful psychological factor: FOMO. When people see Bitcoin's price skyrocketing and hear stories of massive gains, they don't want to miss the party and be left behind. This fear of missing out, or FOMO, triggers a rush to buy Bitcoin, which can create a powerful feedback loop, sending prices even higher in a self-fulfilling prophecy. It's like seeing a long line outside a popular restaurant. You suddenly want to know what all the fuss is about and join the queue, even without knowing exactly what's on the menu. Moving on, let's consider the impact of big players. When big financial players, think major banks, established hedge funds, or even publicly traded companies like Tesla, start allocating significant portions of their portfolios to Bitcoin, it sends a huge signal to the rest of the market, validating Bitcoin as a legitimate asset class. These strategic moves bring tons of new capital and liquidity into the cryptocurrency space, and perhaps more importantly, they make everyday retail investors feel significantly safer and more confident about jumping in and investing their own money. Finally, let's examine the role of global uncertainty. When traditional financial markets get rocky and unpredictable, like during periods of high inflation, geopolitical instability, or significant political drama, people often start looking for alternative investments and safe havens to protect their wealth. Bitcoin is increasingly seen as a form of digital gold, a decentralized and censorship-resistant store of value, so demand for Bitcoin can spike dramatically when the world feels particularly shaky and uncertain, driving its price upward. So to quickly recap the key drivers we've discussed: positive news headlines and increased adoption, the impact of Bitcoin halving events, the powerful influence of FOMO, the validation and capital injection from institutional investment, and the search for safe havens during times of global uncertainty are 5 significant reasons why Bitcoin rallies can occur. If you diligently keep an eye out for these factors and understand how they influence market sentiment, you'll be well positioned to start spotting potential trends before the majority of the crowd does. But always remember that Bitcoin's price can swing dramatically in both directions, so it's crucial to always do your own thorough research and never invest more capital than you can comfortably afford to lose. If you found this video helpful and informative, please hit that like button to show your support. Subscribe to the channel for more valuable crypto tips and insights, and let me know in the comments section below what specific topics you'd like me to cover in future videos. Thanks for watching, and I'll catch you in the next one.